Hello, and welcome to Diversity's 2020 Personal Income Tax Series. My name is Eric, and I am a volunteer with the organization. Today's topic will provide an overview of the Canadian Personal Income Tax System. Let's get started. Before we begin, we'd like to thank our sponsors for their generosity and support in this series. This includes Guardian Law Group, James Wong Financial Limited, Calgary Chinatown Lions Club, and Elena and Eric, CPA CA. Diversities is a renewed expression of our long-term vision, a welcoming home for immigrants where Calgarians of all ethnic origins are meaningfully engaged in the community. Please note that Diversities does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before preparing any tax returns. In today's video, we will discuss Canada's tax system, ways to file your tax return, who can file and reasons to file, filing due date, taxable and non-taxable income, tax rates and credits, withholding versus tax balance owing, and what you need to do after you've filed your tax return. There are many different types of taxes in Canada: corporate income tax, personal income tax, property tax, sales tax like GST, PST, and HST, excise tax like gasoline tax, cigarette tax, alcohol tax, just to name a few. Our focus today is on the personal income tax. There are two components to the personal income tax: the federal income tax and the provincial income tax, which we will go over briefly later. Once we hear the word tax, the name CRA or Canada Revenue Agency may automatically pop up in your mind. That's right. Even though the CRA does not develop the tax laws in Canada, the CRA administers the tax laws for the federal government and most of the provincial and territorial governments, except for Quebec. In another word, the CRA is the one who makes sure you pay your taxes. Canada's tax system is based on the self-assessment principle, which means it is your responsibility to complete a tax return each year to report your income and calculate whether you owe tax or receive a refund. There are different ways to complete your tax returns. You can hire someone to file it for you. For example, you can pay H&R Block or an accountant to prepare your tax return. Or, if you are a low-income taxpayer, you can use the free tax clinic in your community. This year, Diversities is partnering with CPA Alberta to file tax returns for low-income individuals and families for free starting March 1st. Please contact Diversities for details and eligibility. You can also prepare your own tax return online, on paper, or on the phone. Let's go over these three options. To file your tax returns online, you will need a tax return package. Some of these tax return packages are actually free to use. In the next slide, we will show you the list from the CRA website. In the past, we were able to go to the post office to pick up a paper version of the tax return form. However, the post office does not carry the paper version anymore. Instead, you can call the CRA for a copy. Or, if you filed your 2019 tax return on paper, the CRA will send you a paper copy of the 2020 tax return form automatically by mail around mid-February. Lastly, filing over the phone is a new filing method introduced by the CRA recently. Please note that this option is only available to those taxpayers with low or fixed income and had received an invitation from the CRA. It's a service that lets you file your return by answering a series of short questions through a secure, dedicated, and automated telephone service. No matter which method you choose to file your tax returns, please remember that it is your responsibility to file your tax return each year. And whether you decide to hire someone or prepare your tax return yourself, it is beneficial for you to understand the fundamentals of personal income tax. In reference to the previous slide, here are 16 tax return software certified by the CRA. As mentioned, some of these are free to use. Now, let's talk about who needs to file a tax return. Anyone who resides in Canada, meaning you live in Canada, or anyone who has spent 183 days or more in Canada will be required to report their worldwide income each year. Note that whether you are a resident for Canadian tax purposes is not connected with your immigration status. Therefore, in some cases, even if you are not a Canadian citizen, permanent resident of Canada, or visa holder, you may still need to file a Canadian tax return as you may be considered a resident of Canada for tax purposes. The rules to determine the residency status can be complex, and we refer you to the CRA website listed below for details. Next, the reasons to file. If you owe tax in 2020, you must file a tax return. If you don't file your tax return or if you filed it late, a penalty and interest will be applied on any unpaid amounts and for non-filings. Now, you might say, if I don't owe the government tax, I don't have to file a tax return. That may be true, but if you don't file your tax return, you may miss out on some tax benefits. Because tax benefits may be linked to your filed tax returns, for example, the GST HST credit, the child benefits, some provincial benefits, or the OAS or GIS for retirees, if you don't file your tax returns, you will not receive these benefits. I would also remind students to file their tax returns as well, even if you are not working, because you need to file your return in order to transfer or carry forward the unused part of your tuition as credit for a future year. And if students earn any employment income, that goes toward building their RRSP room, even if the student owes no tax. As part of the 2020 Personal Income Tax series, Diversities has developed separate videos to walk through the filing process for seniors, students, and the working family. Please go to diversities.org to access these videos. The due date for personal income tax is April 30th of each year. For self-employed individuals who own a business, the due date is June 15. Please note, however, that those self-employed individuals have a filing due date of June 15. Any tax balance owing must be paid by April 30th. Lastly, some individuals may have tax installment requirements throughout the year. Please ask your accountant or check with the CRA to see whether you have the obligation to make tax installments throughout the year. Next, let's talk about the types of income required in your tax returns. As we mentioned earlier, a Canadian resident is required to report their worldwide income. So no matter where your income is earned, you are required to report it in your Canadian tax returns. However, not all money you earned is taxable. Only the taxable income needs to be reported in your tax return. Examples of taxable income include your employment earnings, profits from your business activities, investment income, capital gains, and also withdrawals from your RRSP and RRIF. RRIF is a registered retirement income fund, which is what an RRSP is converted into after you retire or at age 71, whichever is later. And specifically for 2020, most of the payments related to COVID-19, like CERB, CESB, CRB, CRSB, or CRCB, that you received will also need to be included in your tax return. Non-taxable income, which means income you do not need to include in your Canadian tax returns, are GST or HST credits you received, Canada Child Tax Benefits, child assistance payments and the supplement for handicapped children, lottery winnings, most gifts and inheritances, most amounts received from a life insurance, most amounts received from TFSA, and most amounts received as a compensation for personal injuries. So far, we have covered who has to file a Canadian tax return, when to file it by, and what income needs to be included in your tax return. Next, we will talk about tax rate, the marginal tax rate concept, and tax credits. First is the tax rate. Remember at the beginning of this video, we said there are two components in your personal income tax return, and they are the federal tax and provincial tax. Listed in the box is the federal tax rate for 2020. At each different tax bracket, there is a different tax rate. This is what we call the marginal tax rate. The marginal tax rate is the tax rate you pay on an additional dollar of income. It does not change the tax rate of the earnings up to that point. Using the federal tax rate as an example, the first $48,535 income you made is taxed at 15%. Any income you made between $48,536 and $97,069 will be taxed at 20.5% and so on. Please note that the 20.5% tax only applies to the additional income above $48,535. Let's go through an example to illustrate how the marginal tax rate works. Let's assume Anna, a Canadian who made $80,000 of employment income in 2020. The first $48,535 Anna made will be taxed at 15%. The next $31,465 Anna made above $48,535 will be taxed at 20.5%. Since Anna did not make more than $97,069 in 2020, the amount to be taxed at 26% will be $0 on this $80,000 income. Anna's total federal tax payable is $13,730, which is $7,280 of tax on the first $48,535 of income and $6,450 of tax on the remaining $31,465 of income. The average tax rate is 17.16%. Note that tax credits will further reduce this tax, and we will discuss tax credits on a later slide. In addition to the federal tax, we also need to pay the provincial tax. The provincial tax rate is also a marginal tax rate, but the tax brackets and the tax rates are different from those of the federal tax. Additionally, unlike the federal tax rates, which apply to all Canadian residents, the provincial tax rate you use depends on the province or territory you resided on the last day of the tax year. For example, if you lived in Alberta on December 31st, 2020, you will calculate your provincial tax using the Alberta tax rates. Listed here is the tax rate for Alberta. For a complete list of the provincial tax rates for each province, please refer to the link listed here. Continuing with our example from the first slide, let's assume Anna resided in Alberta on December 31st, 2020. The Alberta tax she needs to pay on her $80,000 income in 2020 will be $8,000 as shown here. In total, Anna will need to pay $21,730 on her $80,000 income, which included $13,730 of federal tax and $8,000 of provincial tax. The combined tax rate is 27.16%. There are two types of tax credits. They are non-refundable tax credits and refundable tax credits. Non-refundable tax credits are for you to use to reduce your tax payable. However, since the credits are non-refundable, you won't get a tax refund if the non-refundable tax credit amount is larger than your tax payable amount. In other words, non-refundable credit is only useful if you have tax payable. Examples of non-refundable tax credits include personal amount, age amount, and employment amount. Refundable tax credits are credits that will be paid to you if you are eligible. They often are paid in a series of payments through the year. Examples of refundable tax credits are the GST, HST credit, and the working income tax credit. Once again, in addition to the federal tax credits, each province or territory has its own non-refundable and refundable tax credits, and the provincial tax credits only apply to their residents. Here's an example of Anna's income tax calculations, including the federal and provincial non-refundable tax credits she qualified for. With the non-refundable tax credits, Anna's combined tax is reduced from $21,731 to $17,623. One way to think about the personal amount tax credit is that the first $13,229 of income an individual makes is completely tax-free because the federal and provincial personal amount credit completely offsets the federal and provincial income tax up to $13,229. Then between 13,229 and 19,369, an Alberta individual pays federal tax only. If you're an employee, your employer should have withheld some amount from you on each paycheck. Those amounts were sent to the CRA on your behalf each month. Those amounts reduce your tax owing calculated on your tax return and may often result in a tax refund to you when you file. As mentioned at the beginning, we will not be going through the process of filing your tax returns in this video. As part of this 2020 personal income tax series, Diversities has prepared separate videos on how to prepare the tax returns for retirees, working family, and students. Please refer to the Diversities website to review those videos. Before we end our video today, we should talk about what you need to do after you've filed your tax return. Canadian tax law requires you to keep all tax documents for at least 6 years. So in 2021, in addition to your 2020 tax returns, you should also have a record of your tax returns from 2015. However, it is often encouraged that you keep your records for longer. Another thing I would like to suggest is for you to register a My Account with the CRA. My Account allows you to check your tax return filing status, download your tax slips, set up direct deposits for refunds, and refundable tax credits like GST, HST credits, and Canada Child credits, and view your RRSP and TFSA contribution limits. Please follow the link here to set up your My Account. Thank you for watching, and we hope this video helped you understand the Canadian personal tax system better. Don't forget to check the other tax videos for seniors, students, and working families on our website. Please send your comments and questions to info@diversities.org. Thank you.